Good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, February the 7th, 2022. I'm beginning here on the 4-hour chart, and I have now counted out and labeled the alternate view, as I suggested last night that I wanted to present that tonight, and I'm going to do that. And as I've done it, it does take on more light that it could be actually what is taking place. Excuse me. So let's take a quick review. So this level, which was labeled as the ending point for intermediate wave 3, is now back to being the completion point for intermediate wave 5, and in turn primary 5 and cycle 5, and one more above it, supercycle wave 3. Now, if that is being the case, then this, which was labeled here actually as a failure for intermediate wave 4, got shifted over to here. So this initial decline, which was an A, a B, which does not change, and then we do have 5 waves down to form wave C, minor wave C, for an intermediate A wave. And then off of that, we've done thus far an ABC up, and that's being labeled as intermediate wave B. So what that then suggests, and I'll drop down to that hourly chart, what that then suggests is that we are in the beginning stages of a C wave down. Now, how does that all fit in? If I open this up, let's take from the top of that B wave. That's not what I wanted. So let's try that again. Let's go to the 30-minute chart this time. This is the top of the B wave. And what I need to do is I'm counting 1, 2, 3, 4, 1, 2, 3, 4, 5. That is the first 5 waves down, and it stays the same. I counted it as 5 down, and therefore had left the labeling open, because what I would be expecting, and in a way of a C wave, so if I was labeling that previously as an A wave, now I would label it as minor wave 1 of intermediate wave C. Now, if that is the case, we're looking for a minor second wave to complete this rally that we've been now involved in. And now I'm going to again expand this so that we can see what inside. So again, this is just not working for me tonight. That's better. So again, if this is what we're looking for, and this is the 5, and that's the 1, then that is A, and this would be B, and this, this would be ABC, excuse me. But then we start to get into this motion of A, ABC, B, and then this coming down as a C wave for the internal B wave of this correction. So it got very, very confusing, and I'm leaving it open in terms of what that labeling is going to be. We'll back out to that hourly chart so we can put it into perspective. This is what we're talking about. It's all right here. If this is wave 1, we're looking for a wave 2. Now, if this indeed is wave A of 2, and this is all going to be wave B of 2, then we're still looking for a C wave up. So again, let me open that up. So if that's wave A, and all of this is wave B, which doesn't make sense because it wouldn't be complete. So is this then the completion point of the C wave up? But it's more of a 3-wave rally than it is of a 5. So it becomes a little bit more difficult. So this could be A, B, and then somehow I could break this down even more to see what actually transpired inside here. Do we get A, B, 1, 2, and then a 3, 4, and a 5. And then this then completes wave 2, and this is 1, 2 coming down. Now we'll be in that third. And then this is the beginning of the 3 of 3. So again, difficult day. Trading wise, it was very jerking itself around, and we got these rallies, we have these declines, we have rallies, and you had to be very tight on how and what you traded. Again, a lot of that was due to Amazon finding a lot of buyers today. Again, just rollover from last week and from the earnings, and people still moving into the stock. And it trades back up above 3,200. They drop it back down and try it back up, and drop, et cetera, et cetera. And because it is now basically well above $3,000, that bid offer starts to get a larger spread in it, and they trade on it. It's not like they're trading in between, they're trading on that bid and offer. So you get a quick drop, quick rise, quick drop, quick rise as the buy and sells come into the marketplace in Amazon. So what can we look for tomorrow? Again, if we are still thinking that we still got a little bit more room on this particular C wave back up, and this did not complete it, then we'd be looking for a move to come back above 14,819. And I will put some quick Fibonacci's on here that might suggest levels. But again, I don't particularly like the way it would be counted. But if we were just to do straight Fibonacci, we would be looking for it to come above 4819 or 14,819. We have 839 and 876.77. Has potential to get us up all the way up to 14,975. Can it rally that hard? Yep, it sure can. We've seen it. We've traded it. So there's no reason not to believe that it couldn't happen. It's not necessarily what I would be expecting, but that doesn't mean that it can't happen. And still, once it was all done, again, if we're in that C wave down, and this is 1 of C, and we get this larger move as a 2 of C, we are still then anticipating the drop down in a wave 3. So either wave 3 is back under control now and starting, or we're going to finish wave 2, get up into these levels, and then drop quickly. Now, that drop would suggest that we should see increased momentum to the downside in terms of acceleration. Now, that brings into focus our support levels coming off. So we have what we have as far as resistance on the way back up. I would not expect this wave 2 to get itself back up to 15,260. That's where the C wave began. Now wave 2 can, don't get me wrong, it can retrace almost all of that wave 1, and this is wave 1. So it can, with the possibility to get up there. I'm truly not expecting that. And the reason being is that the sellers come in every afternoon now pretty consistently. They came in on Friday, they came in on today, and within that last half hour, they hit it pretty hard. So we're still seeing a lot of what I'm thinking are redemptions from a lot of fund managers and hedge funds, et cetera, et cetera. So we're seeing that come in, and they're shifting their money around, and they're getting out of these positions. So downside can really start to pick up, and we have support at 14,090. Then we start to break 13,729. Again, C wave finds its first support. That wave C would be equal to 0.618 of wave A. It does move it to a new low, so we're clean. At 13,368, that would be one area, possibility, where we'd have a possibility of a bottom in terms of the C wave. But continuing, it would be 13,101, 12,853. C would be equal to A at 12,198. That's the more likely zone. So here we are. trying to fit into what this scenario is, which is a complete turnaround from yesterday. Yesterday, I continued to hold on to the fact that we were still possibly within a B wave going, an intermediate fifth wave going up with the possibility of new highs. This is the alternate view. And because of the selling that I've seen, which should have been reverting back to buy, did not occur. So again, today, I see that selling. So while that is still alive, what the market would need to do, instead of this being just a wave 2 recovery, this would be wave 1, this would be wave 2, or possibly wherever this bottoms out here. And then this thing explodes to the upside. So we're still in that same position as I described yesterday. Downside accelerates to the downside in a wave 3 of C. Upside needs to accelerate to the upside and get us up above 15,260 pretty quickly if it's actually going to be a minor third wave up. So we're still in that exact situation. The market did not really add anything to give us an inclination of really what's going to happen, except the selling that we saw at the close. Very similar to the selling we saw at the close on Friday. Continued selling overnight, continued selling once Europe opened. Then the rally back up, and then once we opened, taking it up to there, but then we sold. And they didn't just sell, kind of, they moved in. This is when the initial sell orders from over the weekend come in, and they took it from 14,781 down to 14,555. Then they bought it again. Then they moved it back up prior to our closing half hour, and then was at 14,727, and they dropped it again, this time down to 14,511. So these are very strong sells, and that tends to begin to negate the power that the market needs to come up with to prove a third wave is in force. Now, again, I want to say that doesn't mean it won't happen, but I would feel on the wrong side if I didn't present the alternate view. So that's what I'm doing today. And under the alternate view, we'd still be looking for upside, but limited to these zones here. And then the market starts to drop. But then it doesn't actually find a spot and everybody starts coming back in. It would start to break, and then it would start to get more intense as support levels were broken, as moving averages continued to get broken. Now here again, on the hourly, you can see we are back below. We broke the 200, we broke the 50, we broke the 20, the 8, and the 4, and we closed below them. On an hourly chart, that starts to present negative. If I move up to the daily chart, it's likely going to tell me the same story. But let's open this up and take a look. The 50, the 200, the 20, it's below it all. It closed below them. It did on Friday as well, but today it's closing below them again after attempting to try to get up. So that's a day 2. Actually, it's even more. Why does this thing do that? Such a sensitive mouse. We have a negative bar, a negative bar, a negative bar, a negative bar. So there's actually 4 negative in a row on the daily chart, which does not lend a lot of credibility that the market's going to turn around and just race back above all of these moving averages as it starts to move up towards those new highs. So that's why we have the alternate view. That's why I'm presenting the alternate view. So again, if I have people that are coming in and they're following this analysis and basing some of their trades on it, I apologize. Hopefully that you're able to either switch the trades, or you've got stops in place, or you know how to reverse things around. If day trading we're prepared for whatever comes in. So I'm going to leave it right there. Trade smart, use the moving averages, use the Fibonacci, and then pay attention to how the moves unfold. Acceleration to one side or to the downside should become evident and last longer than one bar. In other words, it's going to be continuing, at least, and even on the hourly basis, it'll continue. So this was the close, but if it comes and it continues, and then it continues, and then it continues, that's the acceleration that I'm looking for. Okay, I'm leaving it right there. Next update, Tuesday, the 8th.